Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ethan Allen Interiors Inc. quarterly report. Ethan Allen Interiors Inc. offers a wide range of home furnishings and interior design services to customers in the United States and internationally. The company operates through two main segments, wholesale and retail. The company's product offerings include case goods items such as beds, dressers, tables, chairs, and entertainment units. They also offer upholstery products like fabric-covered sleepers, recliners, sofas, and love seats. Additionally, they provide window treatments, drapery hardware, wall decors, lighting, clocks, mattresses, bedspreads, throws, pillows, decorative accents, area rugs, flooring, and outdoor furnishings. In addition to its product offerings, the company also sells third-party furniture protection plans and other miscellaneous products. Ethan Allen markets and sells its products under the Ethan Allen brand through various channels, including design centers, independent retailers, and its website ethanallen.com. Ethan Allen Interiors Inc.'s stock price has dropped by over 11.74% in the past year due to a combination of factors. One major contributor was the downgrade of its Zacks rank from number 4 sell to number 5 strong sell in November 2025, citing significant headwinds in the home furnishings industry. These challenges include persistent trade tensions, a sluggish housing market, and shifting consumer spending patterns. The company's financial performance has also been declining. In fiscal year 2025, Ethan Allen reported a revenue decrease of -4.89% and an earnings decrease of -19.15%. The second quarter of fiscal year 2026 saw a further decline in consolidated net sales by 4.7%. with diluted earnings per share dropping to $0.46 from $0.59 the previous year. Macroeconomic headwinds have also played a significant role in the company's stock price drop. Stubborn inflation and uncertainty in the housing market have eroded consumer confidence, making it more difficult for Ethan Allen to sell its products. The ongoing challenges in these areas are expected to continue impacting the company's performance in the near future. Ethan Allen Interiors Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $1 billion. Ethan Allen Interiors Inc. trades at a lower price-to-earnings ratio of 14 times and a higher price-to-book ratio of 1.32 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 6.34%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline can be identified through a review of the key factors that have influenced our company's financial performance. Revenue decline is primarily driven by a decrease in wholesale orders, with a significant drop of -19.3% recorded on page 7. Additionally, retail written orders also saw a decline of -17.9%, further contributing to revenue decline. Within the wholesale segment, lower contract sales and higher tariffs and incremental marketing costs have also played a role. On the other hand, revenue growth is driven by several key factors. Incremental designer floor sample sales have been a significant contributor to revenue growth, as has the higher starting retail backlog. Furthermore, increased promotional activity, combined with elevated designer floor sample sales and impacted gross margin due to incremental tariffs, have all contributed to revenue growth. Overall, these drivers highlight the importance of managing wholesale orders, contract sales, and marketing costs in order to mitigate revenue decline, while also leveraging opportunities for growth through strategic initiatives such as increasing designer floor sample sales and promotional activity. The net income of the company experienced a decline between 2025 and 2026, with adjusted diluted earnings per share, EPS, decreasing from $0.59 to $0.44. This decrease was also reflected in the net income figures for Q2 2026, which showed a reduction of $3.9 million compared to Q2 2025. The decline in net income can be attributed to a decrease in profit margins. The adjusted operating margin dropped from 11.5% to 9%, while the consolidated operating income margin decreased from 11.5% in Q2 2025 to 9.5% in Q2 2026. Additionally, the wholesale operating income margin declined from 11.1% in Q2 2025 to 8% in Q2 2026. The significant reduction in profit margins suggests that the company faced increased costs or decreased revenue during this period. The decline in net income and profit margins indicates a challenging financial situation for the company, which may require adjustments to its business strategy to improve performance. The company's financial performance indicates a healthy trend in its ability to generate cash from its core operations. According to the extracted summaries, the company has successfully produced $15 million of net cash provided by operating activities. This is a significant indicator that the company is generating positive operating cash flow, which is essential for sustaining business growth and meeting financial obligations. The data presented on page 14 and page 15 further supports this conclusion, confirming that the company has indeed generated positive operating cash flow. This achievement suggests that the company's operations are efficient and profitable, enabling it to generate a substantial amount of cash from its core activities. As a result, the company is well positioned to invest in growth initiatives, pay off debts, and reward shareholders with dividends or stock buybacks. The company's debt level and interest expenses have remained relatively stable over the past year. As per the financial summaries, there was no outstanding debt at December 31, 2025, indicating that the company has maintained a debt-free status. Furthermore, the total contractual obligations and operating lease payments remain unchanged, suggesting that the company's financial commitments are consistent. The only notable change related to financing activities is a decrease in cash used for financing from $32.5 million to $28.4 million. However, this reduction does not necessarily indicate an increase in debt level or interest expenses. In fact, it suggests that the company has managed its finances efficiently and reduced its reliance on external funding. Overall, there is no indication of a significant increase in debt level or interest expenses, indicating that the company's financial health remains stable. Management's outlook for Ethan Allen is centered around positioning the company as a premier interior design destination. To achieve this, they plan to reinvent product offerings through current fashion trends while maintaining vertical integration and focusing on production efficiencies. However, market challenges such as slowed U.S. government spending and tariffs have impacted results. To address these challenges, management plans to invest in strategic marketing to further the brand and implement selective price increases to offset costs. They also aim to maintain a robust balance sheet and monitor liquidity closely. In terms of growth, Ethan Allen will rebuild its damaged structure with $2.50 minus $3.5 million in capital expenditures. Management is cautious about potential risks, particularly in the commercial real estate market, and plans to take steps to mitigate these risks. Overall, management's strategy focuses on repositioning the company for long-term success while navigating current market challenges. The company's financial performance reveals a commitment to shareholder value creation through dividend payments. According to the provided information, the company has indeed paid dividends, as explicitly stated on multiple pages of the report. The exact amount of $26.3 million is also mentioned, indicating a significant investment in rewarding shareholders for their loyalty and trust. Furthermore, the repetition of paid dividends, yes, across different pages reinforces this conclusion, leaving no doubt about the company's stance on dividend payments. This demonstrates a clear understanding of the importance of shareholder value creation and a willingness to allocate resources accordingly. Concerns about inventory buildup and supply chain disruption are evident in the recent data. The decline in wholesale orders by 19.3% suggests a possible reduction in demand, which could lead to overstocking if not managed properly. Furthermore, the decrease in wholesale backlog by 13.6% from last year indicates that the company may be struggling with inventory levels. The fluctuations in operating results and written orders also raise concerns about liquidity and cash flows, implying that inventory buildup is affecting the company's financial situation. Additionally, increased tariffs and lower incoming contract orders due to government spending slowdown indicate potential supply chain disruptions. The significant operating lease commitments and open purchase orders of $146.3 million and $21 million respectively further highlight the risks associated with supply chain management. The combination of these factors suggests that the company is facing challenges in managing its inventory levels and supply chain, which could have long-term implications for its financial health and operational efficiency. That concludes the financial summary for Ethan Allen Interiors, Inc. Feel free to comment below, and I will be happy to answer them when possible.